All right, let's tackle one of the biggest, most polarizing puzzles in the entire stock market: Tesla. You've got a company that has investors, analysts, and, well, pretty much everyone fiercely divided. It's really a story of cold, hard numbers versus a grand vision, of today's reality versus tomorrow's promise. So let's dive in and try to unpack this trillion-dollar question. To really wrap your head around this, we have to start with this number. At its peak, Tesla's value in the market skyrocketed to $1.6 trillion. Yeah, that's trillion with a T. A number so massive it just forces you to step back and ask some really fundamental questions. And that right there, that's the heart of the mystery, isn't it? How on earth does a company that, let's be honest, produces just a fraction of the cars its rivals do, get a price tag that's just so astronomical? This is the core of what we're digging into today. Okay, this chart just lays the whole problem out bare. We're looking at the price to sales ratio, basically how much you're paying for every dollar of a company's sales. And look at this. Ford and GM are trading for less than half of what they make in a year. The average for their peers is about 1.5 times sales. And then you have Tesla sitting at a wild 16.5 times its sales. It's not just in a different league, it's playing a completely different sport. So let's start with one side of the argument. Let's look at this purely from a traditional, by-the-books financial view. This is the case that says Tesla is wildly, maybe even dangerously overvalued. Well, you really can't get much more blunt than this. An analysis from Simply Wall Street, which crunches a whole bunch of different valuation numbers, gives Tesla a big, fat 0 out of a possible 6. It's basically saying that when you look at its fair value, what analysts are forecasting, and its price compared to the rest of the market, the stock is just fundamentally expensive. Full stop. And this chart just hammers that point home. Forget just comparing it to Ford and GM. When you stack it up against the entire US auto industry average, which is about 0.8 times sales, Tesla's 16.5 is just out there. From this perspective, you are paying over 20 times more for a dollar of Tesla sales than you are for the average competitor. It's a huge disconnect. This quote from an analyst really nails the core of the bear case. While the stock price has been on this incredible rocket ship ride, the actual earnings in the short term have been down. So for the people focused on the numbers right now, they see a company whose real-world performance just doesn't seem to justify the hype in its stock price. Okay, so now we have to flip the script entirely. Let's look at the other side of the coin. Because the case for Tesla argues that if you're stuck looking at old-school car company numbers, you are missing the entire point. And this quote right here, this is everything for the believers. It's a complete reframing of what Tesla even is. They're saying, stop thinking of Tesla like you think of Ford. You need to start thinking of it as a disruptive tech firm, where the car is just the first device, the first product, in what's going to be a much larger ecosystem. And this is the future that investors are buying into. See, it's not just about selling more cars next year. It's about a potential monopoly on self-driving with robotaxis. It's about revolutionizing labor with the Optimus robot. It's about massive AI power with the Dojo supercomputer and dominating the future of energy and charging. Each one of these is a bet on a brand new, potentially multi-trillion-dollar market. You know, this quote draws such a powerful parallel to the past. For years, people just laughed at Amazon, saying it was just an overvalued online bookstore that didn't make any money. But the Amazon bros saw the future, an everything store, a cloud computing giant. The argument here is that the exact same thing is happening now. Valuing Tesla on car sales today is like valuing early Amazon just on the books it sold. Now, of all those big future bets, there is one that stands head and shoulders above the rest. The key that could unlock that massive valuation is full self-driving, or FSD. This is the one project that could truly make or break the entire investment. It's a winner-take-all kind of bet.
And you can see why investors are so hyped when you look at the timeline they're talking about. These key milestones aren't some far-off dream decades from now. They're supposedly happening right around the corner. We're talking about revealing the vehicle, and then the really critical step, taking the human safety driver out of the car. For believers, this vision is starting to look less like science fiction and more like an approaching reality.
But make no mistake, FSD is fiercely debated. Skeptics will tell you, hey, it's not truly driverless yet. It still needs a human watching it. They'll point to competitors like Waymo who have logged more fully autonomous miles.
But the believers fire right back, saying Tesla's approach, using cameras and learning from its entire fleet of cars on the road, is way more scalable and will eventually win. This is the real technological heart of the entire debate.
So, after all of that, we're brought right back to the central conflict, the main event. Is Tesla a car company or is it a technology company? Because your answer to that one question changes absolutely everything. This slide just nails the two competing realities. On one side, you have the car company mindset. That grounds you in the here and now. How many cars did they deliver? What are their profit margins? How do they stack up against GM? But then there's the tech company mindset, which asks you to value the future, the massive potential of AI, robots, and energy. It's not just a different set of numbers, it's a completely different way of seeing the world. And really, this is the bottom line for anyone on the pro-Tesla side. The argument isn't that Tesla is worth all this money today. The argument is that if, and it's a big if they are the first to solve true self-driving, the market for that is so unimaginably huge that today's stock price will end up looking cheap. So when it comes right down to it, an investment in Tesla isn't just about buying shares in a company. It is an explicit, all-in bet on a very specific, incredibly ambitious, and, let's face it, very uncertain vision of the future. But it is so important to remember this classic piece of market wisdom. Whether you think the stock is irrationally high or you think it's irrationally low, the powerful stories driving Tesla's price mean it can defy what the numbers say for a very, very long time. And that brings us full circle. Is Tesla an overvalued car company that's struggling with growth? Or is it a revolutionary tech company that's on the verge of changing the world as we know it? The answer to that question is the answer to its trillion-dollar valuation. And that, well, that's something every single person has to decide for themselves.